My name is Brian Dins, and I want to talk to everyone about why dividend stock investing is the way to go if you're a long-term investor. Don't get me wrong, there's quicker ways to make money, like guys who crush it with options, they can make a lot more. But with this strategy, it's very, very low risk, where you can get 10 to 20% a year compounded. And if you're in a situation where you can throw 20 grand in it like a year, 10 years in the future, you're going to be worth a lot of money and you're going to have a lot of passive income. Now look at it this way, okay? If you have a bank account, which pretty much everyone does, you're lucky if you get 1%. Most people get a fraction of a percent. Like my bank account, I have thousands of dollars in it, and I think my interest payments are end up being 30 cents sometimes. It's a joke. You're not going to get any real money. And, count the fact that inflation might be around 3% a year. Even in a low estimate, it's 2%. So if you're getting 1% a year, your money is losing value as you go on. Well, imagine you wanted to get a bank account that had 5 to 7%. They don't exist. So what you do is you buy companies that are very stable, that are not going anywhere, and you just hold on to them for a very long time. And you use the dividend payments as income. So let's take this example for this scenario. For example, you could buy $100,000 worth of AT&T. Currently has around a 7% dividend. If you had $100,000 worth of AT&T, every single year you would get $7,000 in dividend payments. That would make a difference in anyone's life, But then let's say you had $1 million worth of it. That's 70 grand a year. You could literally retire. It's that simple. So the reason why I'm not going for aggressive strategies trying to make a lot of money quick is because you could lose your money. There's no sure thing. And the stock market is proven for over 100 years that it will continue to go up. And if you just try to time it, it's going to be very difficult. So, you just buy dividend stocks and they will grow. Don't get me wrong, I'm not just doing this for the dividends. I expect every position I have to be worth more money in 5 years. So let's say every position that I own, say I have 100,000 worth, right? And, in 5 years, I expect it to be worth 150,000 in stock value. That's not counting the fact that every year I'm making, roughly 6% is my average. So I'm making 6% a year while I wait for it to go up 50%. It's the closest thing to a sure thing that there is. I mean, this is Warren Buffett's strategy. I didn't make this strategy up. He doesn't only own dividend stocks, but if you look at a lot of his biggest holdings, he's got a lot of Coca-Cola, he's got a lot of Heinz, he's got a lot of dividend stocks because you could just sit there and make more money, literally doing nothing. And if you have the kind of money that someone like him has in a hedge fund, like I said, if you have $1 million, you can get 70,000. If you have $10 million, that's 700,000 a year. You do the math. If you have $1 billion, if you have $10 billion, the dividends are insane. So that is part of the reason why, I'm very interested in this strategy. It's low risk. Low risk in the long term. One mistake that I see newer dividend traders, investors making is they're trading. You don't want to buy. Say you buy, Coca-Cola, and then it drops 15%. You go, oh my God, I gotta sell it. Do you really think Coca-Cola's going anywhere? Do you think just because it dropped 15%, it's, oh my God, it's never gonna go back up? Coca-Cola's worth around 45 right now. It's definitely gonna be worth 60 in 5 years, at least. So why would you sell it at the bottom? I will be buying more. That's just the way I look at it, and that is why I believe in dividend stock investing.